Hey, welcome back, everyone. One of the coaches at Unger Academy here, and today we're going to be looking at what happened last week in the financial markets. Before we start, though, as always, I invite you to please subscribe to our channel, go and click on the notification bell, and leave us a like to this video. Thank you so much. Hi, we are the Unger Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unger, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Okay, so let's start with the stock markets, the stock indexes, which are showing signs of an upward trend this week. Today is slightly negative at the moment, but let's wait and see how it will close later. The top performer is the Nasdaq with approximately plus 1.5%. Unchanged or almost unchanged was the mini S&P 500. The European stock exchanges performed well, in particular the DAX, which posted a positive 1%. Taking a look at the mini S&P 500, we see that it's close to an important level that will probably not be easy to break through. However, over the past few weeks, the stock markets have indeed shown signs of moderate strength. So let's follow them closely because the evolution could be interesting. Bonds have also shown some strength so far because they've rebounded quite a bit, but this week, as you can see, they all show negative returns. In this chart, we see the T-bond is currently losing almost 2%. It's also true that the bond indexes have also risen quite sharply from their lows. There seems to almost be this change in underlying sentiment. Let's now turn to the energy market, which has shown signs of weakness this week. Specifically, RBOB gasoline declined by almost 10%. Crude oil just recorded a minus 9.78%, so an equally significant decline. Heating oil, also dropped by a negative 8.58%. Natural gas, however, fared somewhat better and remained at particularly high levels. Now, we know that tensions on this commodity are related to the conflict that is still going on between Russia and Ukraine. As for metals, we've got mixed returns this week. We have a rise in platinum, a decline instead for silver. And gold has remained stable. The meat market also went up, but not particularly sharply. And we have mixed returns on soft commodities as well, specifically orange juice, which rose by a positive 4.68%, which is close to its recent highs. Other declines were seen in the grains market. Specifically, it's interesting to see the performance of wheat, which after the rise related to the conflict in Russia and Ukraine, has now returned to price levels that were recorded before the outbreak of the war. And that's a positive aspect. As we all know, it's a commodity, and in general, you can link this to the decline that we're seeing in all commodities, like agriculture and particularly energy commodities, excluding perhaps natural gas. In parallel, we're also witnessing a rebound in bonds and equities, and so overall it is a positive picture, especially because of the tensions tied to inflation, and which, as we know, have encouraged central banks to raise their rates. So this could be a sort of return towards normality. Well, we'll only discover this, of course, in the near future. Finally, let's turn to currencies. Here again, we saw fairly large declines because we know that generally the volatility of these underlying assets is more limited than in other commodities. I mean, just take a look at the euro dollar, $1.02. And the strength of the US dollar against all other currencies is quite obvious here. And finally, let's turn to Bitcoin, which loses about 3% this week, currently at a value of 23,270. A small bullish reaction seems to be underway. Still a long way to go to recover the highs of the beginning of the year. And the cryptocurrency sector is certainly not yet out of the crisis that it is experiencing. Regarding volatility, we do see quite low volatility in the short term, as is normal, because we've seen a rebound in the stock indexes, while on the other hand, in the long term, we are at average values. Let's also take a look at the volatility term structure. Currently, it's in full contango, so in a situation of normality and an absence of tension that is promising for the future performance of the stock indexes. The VIX is also currently at significantly low values compared to the past 6 months. Right, now let's take a look at the rollovers scheduled for next week. We've got cocoa, coffee, and the VIX futures. Specifically, we'll have to roll over cocoa on the 8th and coffee and the VIX futures on the 10th. I'd just like to remind all of you that are interested in systematic trading You've got an opportunity to learn from one of the best traders in the field, and you have at your disposal a link through which you will be able to access a free presentation by Andrea Unger, the only 4-time world champion in real money trading, who will introduce you to his trading method. You'll also be able to get the bestseller, The Unger Method, covering only the shipping costs, and so much more. Take my advice. Go check it out. And guys, that's all for today, but don't forget to subscribe to our channel. Go and click on the notification bell and leave us a like if, of course, you like this video. With that, have a fantastic weekend, and we'll see you next week. Bye-bye.